vision is to offer makeup and personal care products made with natural ingredients and eco-friendly processes, giving people a healthier and more conscious option for skincare. And our vision is to become a recognized brand in Mexico for the quality of our natural products, standing out for our environmental commitment, innovation, and close relationship with customers.
Now, I will explain the accounting part of our company. The company developed a master budget and a cost volume profit analysis, also known as a CVP analysis. These financial tools are very important because they help to organize financial information and support better decision making for the future of our company. They allow us to plan operation, control costs and expenses, estimate future profits, and evaluate possible financial risk. In other words, the master budget works as a complete financial plan for the entire year. On the right side of the slide, we can see also the selling price of our company products, including the natural liquid foundation, hydrating lipstick, organic cream blush, natural concealer, and mineral compact powder. These prices are very important because they help us to calculate the company's projected sales revenue. Purpose of the master budget. This slide explains the purpose of the master budget. The main objective of this tool is to provide complete financial plan for 2026 and help the companies to manage its financial activities efficiently. The master budget helped the company to estimate future sales and production levels, plan costs and expenses, manage cash flow, allocate resources efficiently, and anticipate possible financial problems before they happen. This slide also presents the main components included in the master budget. First, the sales budget estimates sales revenue. The production budget calculates how many units need to be produced. The direct material budget estimates the raw materials required for the production. Well, the direct labor budget calculates labor costs. In addition, the manufacturing overhead budget includes indirect production costs, and the cash budget controls cash inflows and outflows. And the budget income statement shows the projected profit of the company. All these budgets work together to help the company to maintain its financial organization and support future growth. Sales forecast. In this slide, we can see the sales forecast for Beo Cosmética Natural. This table estimates the expected sales revenue for each quarter of 2026. The company expects sales increase gradually during the year due to the growing demand of organic cosmetics, social media marketing, and greater brand recognition. Each product has a different selling price and projected number of units sold. For example, the natural liquid foundation has a selling price of 350 and an estimated annual sales of 6,000 units. The hydrating lipstick is expected to sell 7,100 during the year, making it one of the company's best-selling products. At the bottom of the table, we can see that the expected annual sales revenue is approximately $7.9 million. This information is very important because sales forecast serves as the foundation for other budgets included in the master budget. It also helps the company and plan production according to customer demand. Cash flow estimates. This final slide focuses on the cash flow estimates. These budgets estimate the amount of the cash company expected to receive and spend during the year. The company assumed that 70% of the sales will be collected during the same quarter, while the remaining 30% will be collected in the following quarter. The cash receipts budget shows expected collections for the customers, while the cash disbursements budget includes expected payments such as direct materials, direct labor, manufacturing overhead, selling and administrative expenses, and equipment purchases. Finally, the cash budget summarizes all cash inflows and outflows. According to the projections, the company expects to maintain positive cash balances throughout the year and end with approximately $1.280 million cash. Overall, these projections shows the Beo Cosmética Natural strong financial plan, positive cash flow, and good financial organization to support the future growth and decision making.
In Beo Cosmética Natural, we use a batch production system, meaning that we produce according to the projected sales demand. First, we estimated sales for each quarter. 5,700 units in the first quarter, 6,650 units in the second quarter, 7,500 in the third quarter, and 8,350 in the fourth quarter. Our company also keeps a safety inventory equal to 20% of the next quarter sales avoiding to shortage. To calculate our production, we added projected sales plus desired ending inventories and then subtracted the beginning inventory. For example, in the first quarter, there is 5,700 plus 1,330, that equals to 7,030 required units, minus 1,140 beginning inventory, resulting in 5,890 to be produced. At the end, the total annual production was 28,200. Then we prepared the direct materials budget. Each unit requires 1.5 pounds of materials and $85 each. The total materials required were 42,300 pounds, with a total cost of $3,595,500. This budget helps Beo to control the inventory, to avoid waste, and to make sure the company always has enough products to satisfy the customer demand. Next, we prepare the direct labor budget. This one, each unit requires 0.40 hours of labor, so we multiply the units to be produced by the labor hours required. For example, in the first quarter, 5,990 by 0.40 is resulting to 2,356 hours. Then we multiply the labor hours by the wage rate of $95 per hour. After all the calculations, the total labor hours were 11,280, and the total direct labor cost was $1,071,600. After we prepared the manufacturing overhead budget, including the indirect materials, utilities, maintenance, rent, and depreciation, the total maintenance overhead was $739,000. After subtracting the depreciation, the total cash disbursements were $691,000. This budget helps both to estimate production costs accurately and make better financial decisions. Then we developed the selling, general, and administrative expenses budget. This budget includes the administrative salaries, the marketing, the office expenses, the delivery expenses, and the miscellaneous expenses. The marketing expenses increased from the first quarter to the fourth quarter because the company plans to invest more in digital advertising and social media campaigns to increase the sales. After adding all the expenses, the total operating expenses were $759,000. This budget helps both to manage comparing costs and support the daily business activity outside the production. Finally, we prepared the investments plan. The company plans to invest $60,000 in the first quarter and $40,000 in the third quarter. These investments will improve the equipment to increase the productivity and to support the future growth. In total, we planned a capital investment is $100,000. This plan helps both to improve the efficiency, to product quality, and to long-term growth.
My name is Valeria, and I will be explaining the slide number 13. Well, in this slide, as already said, this slide will project the financial results of the beauty cosmetic natural company for the year of 2026, that is this year. The financial statements summarize expected financial performances of the company based on the master budget that we can see on the slide and all the operational estimates. According to the budget income statement, Beauty Cosmetic and Natural expects total sales of revenue of $500 during the year. The estimated cost of goods sold is $5,361,100, resulting in a gross profit of $2 million. The gross profit of $2,539,400, as we can see on the slide. After subtracting selling, general, administrative expenses, the company expects an operating income of $1,780,400. After considering interest expense and income taxes, the project net income for 2026 this year is $1,214,780. These financial results will demonstrate that the company expects positive profitability due to the increased sales, efficient financial planning, and growing demand for natural cosmetic products that are really well things for our company. Okay, so now the next slide that I will be explaining is, as we can see, is a cost billing profit analysis. In this analysis, or CVP as you may know, helps the company to understand the relationship between the sales, the cost, and the profits during 2026, that this year that we launched this company. This analysis is very, very important, as I said before, because it helps the management and calculate the break-even point, estimate target profits, and evaluate financial risk that I may know for the market that we are. And the company classified its cost into two categories: fixed cost and variable cost. Variable cost includes direct materials, direct labor, and some manufacturing expenses that change depending on the production volume. Fixed costs on the other side include rent, administrative salaries, depreciation, and other type of expenses that generally remain constant regardless of sales levels. The CVP analysis helps management make better decisions related to pricing, production, and future business growth. And well, our next slide, we are continuing with the CVP analysis for the company, and is the total fixed cost and total variable cost. First, the fixed cost one remain constant regardless of the numbers of units produced or sold. The company estimate annual fixed manufacturing overhead of $480,000 and fixed operating expenses of $340,000. This result in total annual fixed cost of $820,000. And well, Next, the company estimates total variable cost for each product. Variable costs change according to production and sales levels because obviously they include direct material, direct labor, and production related expenses. Like I told before, the estimated total annual variable cost for all the products is $4,041,500. These estimates are important because they obviously help our company to calculate contribution margin and determine profitability. As we can see on the slide, it is the tables with all the products, unit sales sold, your variable cost per unit, and total variable cost. All our products and their cost. Okay, so the next slide and my final slide is the unit variable cost and contribution margin. So the unit variable cost, we know that represents the average variable cost required to produce one unit. And in these calculations, well, first, to begin, the unit variable cost we calculated it by dividing the total variable cost by total units sold. The results that we saw in it shows is that the average variable cost per unit is $143.32. And so next is the contribution margin, like it was calculated. The contribution margin represents the amount remaining after variable costs are deducted from sales revenue. The average selling prices per unit is $280.16, and after subtracting this unit variable costs, the contribution margin per unit is $136.84. Well, and we saw that this means that each unit sold contributes approximately $136.84 toward covering fixed costs and generating profit. And it's like a very good thing for our company. And the contribution margin is very, very important because we know that it helps for the company evaluate profitability and financial performances. And as we can see, thank you.
Now I'm going to explain the financial analysis and profitability section of Cosmetic Natural. First, we calculated the unit variable cost and the contribution margin. The unit variable cost represents the average cost required to produce one product, including materials, labor, and other variable expenses. In our case, the unit variable cost is 143.32 pesos per unit. We also calculated the contribution margin, which is the amount remaining after subtracting variable costs from the selling price. This amount helps cover fixed costs and generate profit. Cosmética Natural has a contribution margin of 136.84 per unit pesos, which shows that the company can generate a positive contribution and how many units the company needs to sell in order to cover all fixed and variable costs without generating either profit or loss. So according to our analysis, Blue needs to sell approximately 5,992 units. To reach the break-even point in terms of sales revenue, the company needs around 1,678,719 pesos to cover all operational costs. After that, we calculated the margin of safety. This indicator measures how much sales can decrease before the company starts experiences losses. Cosmética Natural has a margin of safety of more than 6.2 million pesos, which indicates low financial risk and strong financial stability for the business. We also prepared a contribution income statement at the break-even point. The statement shows how, at the break-even level, the company is able to cover all fixed and variable costs, but it does not yet generate profit. Finally, we analyzed the target net profit. The company wants to achieve a net profit of 500,000 pesos, and based on our calculations, Boo would need to sell approximately 9,646 units to reach that goal. This demonstrates that the company has strong growth potential and that its financial projections are realistic and achievable through proper marketing strategies and sales growth. Overall, this financial analysis helped us understand the profitability, financial risk, and future potential.
In conclusion, through this project, we learned that creating a company involves much more than just a good idea. We have to analyze the market, organize finances, create strategies, and think about customer needs in order to make Cosmética Natural a realistic business proposal. This experience helped us better understand how businesses work in real life, and how important planning, innovation, and teamwork are for achieving success.